Hello, everyone. This is Dr. Mahmoud Al-Odeh, and I'm here to explain Chapter 1 with you. Chapter 1 just will give us an introduction for this class, TEDT 2211. And in this chapter, we will be talking about just the basics of cost management and some of the concepts that we will be hearing and using over the semester. So let's go ahead and start. So the first slide here, you will see that the project costing management, why this is important, why do we need it, why we study about cost management, and is it important for me as an operations manager, as a project manager? Yes, of course, because project, once you gain the skills, you will be able to measure, monitor, record, and report costs related to activity, whether the activity is a project or producing a product or providing a service. And managers should be able to monitor the cost because they want to know the productivity for this project over the life cycle for this project. So it is important for a manager to keep an eye on the project, how much they spend, compare it to the budget, to the plan, what has been budgeted for the project, and then decide the productivity of that project or for that activity particular. Cost management is essential to gain information for pricing. So one of the things that we need to do as operations managers and project managers is to put a price for a product or service that we provide. And in order to do that, to do the pricing, what we need to do, we need to monitor the cost for this activity, for this project. And based on the expenses that we pay, based on a profit that we would like to make, the margin, we could put the price for that. Also, it's important for cost control and scheduling activities. So whenever we have a project, we need to control our spendings. We have a limited budget, and therefore we don't want to exceed that budget. Otherwise, that project will not be considered as a successful, or it would not be completed as planned. Something else that we should consider is the resource utilization inventory as well. When these resources will be available, how many of these resources do we need? And of course, for presentation purposes, all companies, all top management, they want to hear about the financial performance for their projects. So you as a project manager, as an operations manager, what you will do some presentations to your top management showing the performance of the project. Are you on budget, behind, under budget, or above the budget? Are you on schedule, behind schedule, or you are needed extra time? So these are kind of things that you want to do. That's why we're studying the cost management, because these are important. We need to learn about how we could do the costing, how we could consider the expenses, what the strategy, what the criteria that I want to do the pricing. And just a piece of information here that I put to you, there's a statistics from the PMI, the Project Management Institute. In 2017, there only 57% of projects were completed within the original budget. So imagine that there's about 40% of the project did not complete the project within the initial budget. So that's a big number, and you think it's an easy process. Just look at the expenses and that's it. No, it's not that way. There are other factors that we should consider, and that's why you will see this low percentage of completion within the original budget, 57%, and 43% they're not able to complete the project within the initial budget. So it is very critical. It is very important. We need to learn the skills, how to manage project, in particular, the financial aspect of projects. Here are some of the terms that we will be using over the semester. We will be, especially in the first chapter, we will be talking about the income statement, balance sheet, and statement of cash flow. We're going to discuss this in more details, and we will practice the income statement. We will read income statement. So what is the income statement? The income statement is a financial statement that used to report the company financial performance over a specific period. So we need to look into, is this company making money? Is it losing money? And the balance sheet right there, where you will look into a different financial statement than the income statement. So income statement will tell you if you're making money or losing money. Balance sheet basically will show you the assets, the liabilities, and the shareholder of the company, how much of the company you own, how many loans on this company, who are your partners in this company based on the shareholder equity and so on. So that's the balance sheet. For the cash flow statement, the statement that shows the net amount of cash or cash equivalents transferred in and out of the company. We need to know where this money is spent on and where this money coming from into the company. So we need to look into the cash flow transaction in and out of the company, and maybe focus on these spendings that we do and focus on performing a better efficiency in terms of spendings on a specific projects. All right, other concept that we will be talking about, it's the cost itself. What is a cost? It's the expenses that are required to produce or produce a product or provide a service. And so this is basically how much we need to spend to make this available for our customers. And again, when I talk about production, it could be something, a service, could be a construction, could be anything related to your field. So it's used, producing product, you could replace it with providing a service or constructing a house or something like this. Revenue is the money generated from the normal business operations, and these are basically came from the sales prices for items multiplied by the number of items that you sold. So for example, if you're selling laptops, each laptop costs $500. You sold 10 of them this week, 10 times 500, so you generated a revenue of $5,000. And this is also called the top line or the gross income. And usually when we have a conversation with investors, they say, all right, well, what is the top line for this project, for this activity? Well, that means they're asking about the revenue, how much you basically making of sales. And also this is called in the income statement, called as a sales. Revenue is called also, again, sales in the income statement. Another term that we will be considering here, it's acquisition. Acquisition is when the company purchases most of or all of another company shares. Why is that? To gain control of that company. So it is basically purchasing part of a company or all of it to gain control, and that's called acquisition. Margin or a profit margin, this is the difference between a product or service selling price and the cost of production or making this product available. And also this could be considered as the ratio between the profit and revenue. So find out the margin of the profit, which is finding out how much you spend, how much you sell it, and what would be the extra money that you're keeping into your pocket. That would be the margin. Overhead expenses. These are, there are different names for it. It could be called the indirect expenses or overhead expenses. These are expenses that we have to pay to support the business, not directly related to the product or the service provided, but this could be the rent, the insurance that we pay, the utilities that we pay on the facility warehouse, for example. And these are called the overhead expenses. Also, we need to be aware of these concepts related to depreciation. We call depreciation, which is lowering the cost of an asset over time. And if it's a tangible asset, we call depreciation. If it's an intangible asset, like a software license or trademark, we call amortization. Amortization is basically reducing the cost of the asset over the time, life of that asset for intangible assets. But if we have a tangible asset, that would be called depreciation. Again, reducing the cost of the asset over the time. Liquidation, that's the last term that I want you to be aware of. It's called, the liquidation is when we turn the asset of a company into cash. So sometimes you will have a position where companies, they need cash instead of having buildings and assets. So what they do, they sell these assets, these buildings that they don't need, cars, etc., machines, to gain some cash, and they could invest this cash in something else, in a different business or another opportunities. All right. So what I want you to be aware of all of these concepts, I want you to play this game. This game is called the Cash Flow Online game. I did provided the link here, and I'm not sure if you can click this. I'm sure you can click this because this is a video. You're watching this as a video. So what I want you to go to web browser and type Cash Flow Online, and that will give you a game. That will give you a game that you can play it to become familiar with the cash flows, the in and outs. You become familiar with the balance statement, and this will help you to understand some of the financial concepts here that we will be using in this class. It is a fun game. It is based on a book, a famous book actually, called Rich Dad, Poor Dad. If you haven't read that book, probably you want to read that book. It's just basically a book that will provide you some tips on how you improve your wealth and increase your wealth to become rich. However, the author of that book, they made this game to make the people aware of these financial and how they could improve the game. So I want you to click on that link and play the game. You can play it as a team if you have a family member that you would like to play with. And this is the game, looks like this one here. All right, now once you log in, you have to create an account. They will send you an email to confirm your account. And then once you log into the account, you could play the game. And this is what the game looked like. And you could play again, you're by yourself, or you could join other groups here if you think. So I'm going to create a new room here, 2211. I don't need the password. Create the game. Begin the game. I just want to play by myself here for now, just to show you. And this is where you roll a dice, and this is what opportunities do you have. So for example, here you have a deal opportunities. You could go with a small or big. And in here, this is what I want you to be aware of. I want you to become aware of these terms: income, expenses, assets, and liabilities. And based on the game, you could make a wealth, and these money, these transactions, these cash flows will be registered for you on this balance statement. So I want you to play with this game. I went small this time. I want to buy it. I have some cash, 670. I want to buy 4 of these. Okay, so and then replay, and then pay off loan. So you could take a loan and so on. So I want you to take your time, play the game. And there are several phases for this game. Once you're done with this phase, they will take you into a bigger one. I'm going to end the game right here. And again, I would like you to practice it and become familiar with these terms. It's very helpful to give you understanding of what the cash flows and what are the liabilities, assets, expenses, and income. I'm going to stop the video right here, and that would be the first part of the first chapter. And then I will be making another video for the other content on this chapter. Thank you so much, and I'll see you soon.